Hello everyone, it's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me and can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. So in this live stream, I'm going to be talking about my analysis, my trade setup on Ethereum, the reason why I've put a limit order, and what I'm going to do when price also comes to that key level as well. Now, the first thing to put into perspective is the fact that if we're looking at the monthly time frame, we're consistently creating higher highs and higher low, showing me absolute bullishness. So all my analysis is to look for potential discount areas for price to come down for mitigation and potential continuation to the upside. And in this case, as you can see, if we go to the weekly, we have a weekly high, weekly low. We have this solid break of structure to the upside. And then right here, we came for a retest, mitigated the monthly inefficiencies. So if I clear everything on my chart for 1 second, you can see the inefficiency resting right there. After that mitigation, the next thing I want to see from there is the 4-hour break of structure to the upside. And right here, you can see very clearly, if we go to the 4-hour time frame, you can see our 4-hour swing high and a swing low. And this was the solid break of structure. After this break of structure, you can see this is the last down close candle, the last down push. You can see how price right here, we made a push up, push down, push up, and then this massive push down before we had this consolidation, and then eventually this massive push up. So this massive push down right here is our point of interest. We want to see price mitigate this entire zone. The moment we see that mitigation, we're looking for a 15-minute shift in market structure to the upside. The moment we see that, we're looking for a potential entry into the marketplace. And if we go to 15 minutes time frame, you can see very clearly we created a high, created a low, we broke structure significantly right here, and look what we have right here: low resistance, liquidity. And if we go to 4-hour time frame, you can see on 4-hour time frame, we'll have this massive 4-hour inefficiency resting right here. Massive 4-hour inefficiency. Now, if we use our Fibonacci to draw it on that inefficiency, this is the inefficiency. And right here, this is the 50% of the inefficiency. This is the 50% of the inefficiency. Usually, I would expect price at least between 30 to 50% of the time, I would expect price to mitigate the 50% of the inefficiency. So I removed that. But now, because I'm expecting 50% of the inefficiencies to be mitigated, I'm not going to place my entry at the 50%. I'll place it at least above that 50%. Now, I'm still going to show you things resting above the 50% as well. And firstly, if we go back to the 15 minutes time frame, on the 15 minutes time frame, you can see right here, this right here was the entire down close candle before this entire move up that broke structure. This was the last move to the downside right here, down move before this up move that broke structure. So I'm anticipating to see a retest above this high right here. I'm anticipating a retest above this high right here. Now let me remove this. And then also remove. This is 50% of the inefficiency. You can see that right there. And look what is resting right there, the bodies of the candle. You can see how these things are aligning from understanding the inefficiency on the 4-hour time frame, the bodies of the candle, last down close candle, 50% of the inefficiency, and then we also have inefficiency on the 15 minutes time frame. Fourthly, we have low resistance liquidity resting above those key level, which is giving me the telltale sign that this key level will get mitigated. If we're bullish, this key level has 70% chance of price coming there to mitigate it before a potential continuation to the upside. Now, that being said, I'm going to take this out because I want us to have a very clean chart. And then this is the 50%. Now, we are not interested in putting our entry at the 50%. We are interested in putting our entry at the liquidity. This area, a lot of traders that have been buying this due to the trend line, their stop losses are going to be resting right here. And that is the reason why this is where my entry position is going to be. This is why when you see smart money traders trading, they tell you your stop loss is my entry. This is what it means. The stop loss is the entry. So that being said, we'll be watching this key level, and you can see what's resting at the stop loss, the high of the last down close candle, the bodies of the candle, inefficiency from the 15 minutes time frame, 30 minutes time frame, and also on the 4-hour time frame. They all align perfectly well that this is a high probability key level. Now, what am I expecting to see when I see price come down into this position? The one thing I'm expecting to see is simple. 5 minutes, 3 minutes, shift the market structure to the upside. That is all I'm expecting to see. The moment I see a 5 minutes or a 3 minute shift of market structure after mitigating this line here, the moment that line gets mitigated and I see a 5 minutes or a 3 minute shift of market structure, I'm going to be looking for a buy setup to get into a buy position for a re-entry position, potentially anticipating for price to continue higher. You can see how after we broke structure, we've literally been in a very consolidation phase, and look what we have living right here, and price is nicely living low resistance liquidities to the upside very nicely. You can see that very clearly. So potentially the moment we see accumulation here, after the accumulation, I wouldn't be surprised to see an expansion to rally above this key level and potentially even rally above these key levels. And if we go to 4-hour time frame, you can see we still have low resistance liquidity as well. We go to 8-hour time frame, inefficiency, low resistance liquidity. So any buy from here, right here, would be my first target, first take profit position. And once we see price expand higher to rally above these key levels, then I'll be looking for an opportunity to start to take profits, trail stop loss to break even, protect my trade. So that is what I'm watching for Ethereum. And if we look at Bitcoin is also reacting very nicely as well. And you can see for Bitcoin, this was my analysis on Bitcoin. I wanted to see a mitigation of this key level. So let's go to, so if we go to 4-hour time frame, you can see on 4-hour time frame, this right here was my point of interest. So I wanted to see a mitigation, low resistance liquidity, and you can see price came down there, mitigated it. The next thing I want to see is a potential 15-minute shift of market structure. We have a high, a low, break of structure, and after that break, we've been in a consolidation. So I'm anticipating to see a drop in here, at least mitigating this high one last time. After that mitigation, then I'll be anticipating to see a reversal from here and potential expansion to the upside, potentially even creating new all-time highs for Bitcoin. Because if this key level fails, then it simply means that this low is going to be the next run on liquidity. So I am anticipating if we're bullish and we are to continue to the upside, this low should stay sustained, and this should be the new low, and then potentially price continue to move to the upside from this key level. And then also this would be a very beautiful target as well. So that is my analysis for Bitcoin and what I'm anticipating to see. And if you do have any questions, feel free to drop it in the chat. I appreciate you all for tuning in, and I'll talk to you all next time. Have an amazing day, everyone.